So welcome, everyone. My name's Attorney Anthony Falco, and I am the CEO of Senior Resource Center. And I'm also the managing partner of the law firm Falco & Associates, which I founded over 30 years ago, believe it or not. And yes, I was 10 years old when I did that. So like I said, welcome everyone. It's a little different doing this via Zoom versus in person, which I've done dozens of those. Quite frankly, this is my first one in front of all I can see is the panelists. I can't see the people that have joined us, but we are giving you the opportunity, and which would be important and good for you to send in questions while this presentation is going on, and we'll try to address all of them. And I can assure you, if we don't address it during the presentation, myself or one of the panelists will email you or call you with a response on what information you're trying to get. So today is a continuation of a webinar series that we've put on to provide hopefully practical solutions to seniors and or people that are early retirement or planning for retirement and or planning for their retirement years. So it's a wide range of ages and people we're trying to address in all of these webinars. So we hope you get what you need. And if you don't, again, you can reach out to any of us for more than that. We did start in the fall with everything you need to know about Medicare open enrollment. That's a yearly process. For those of you either on Medicare already or those years are coming, it's a challenge to work that maze, and we're always available to discuss that. Last month we had a presentation how to qualify, get, and use Mass Health Medicaid while protecting your assets, and that was very well received. And is clearly more for people that are having significant health challenges and they need help at home or assisted living or a nursing home. Next month, we'll actually go deeper in that subject. It's going to be called just what is case management. Case management is like care management, where again, how do you actually access services? What agencies do you use? How do you get it into your home if need be, or if that's too challenging to manage at home, when is it the appropriate time to select an assisted living? How do you select the appropriate assisted living? And it's the same factors of when to select a skilled nursing facility for you or a loved one, and how do you select the appropriate skilled nursing facility? And though that's real case management. Today is more about the financial aspects of when should I sell or can I age in place? And again, the financial ramifications of all of that. I'm just looking right here. I just received a text from my wife. She said, just speak like you're talking at the kitchen table. So could you please pass the lasagna, and did we pay the cable bill this month? No, I'm sorry, I had to add that, and she just texted. So again, today is, should I stay or should I go? Again, aging in place or downsizing, selling, and all of the available options if you do sell, right? And we have, if you can, hopefully your video is working well, we have 3 expert panelists, and we also have Scott and Tina helping on the side, but I do want to introduce our panelists. These are 3 individuals Senior Resource Center works with regularly, and they do a phenomenal job for our clients. They're basically one of our resources when we're trying to help our clients do many different things. I'm going to start with Stephen Pepe. Stephen is a reverse mortgage consultant with Longbridge Financial, and he's been doing that for many, many years. He'll give you a little background. And like I said, we use his services quite frequently when clients actually need that product. And he's going to explain the benefits of doing that. And again, the trigger points on when you should be looking at a reverse mortgage. We also have Helen Shiner of the Shiner Group. She's the broker owner of the Shiner Group. She's a very successful real estate agent on the South Shore. She's very active on the South Shore and knows a lot of business people, a lot of governmental officials dealing with planning. And when again, you deciding to sell a home, she is a go-to person for us and our clients because she gets it done. And our third panelist is someone that we've been probably working with the longest, our good friend, Joe Reardon. I think we've been working together for over 20 years, Joe. And he is a licensed funeral director and a certified pre-planning consultant. And he'll explain the difference between that and at need. And again, we've worked with Joe very closely over the years, and he's going to provide you with some great information. All right, so usually when you're talking about a subject matter, it's always nice to kind of relate it to your own personal experiences, even though in this subject, we have hundreds, if not thousands of clients that have been in the position trying to age in place and or if I sell, what are my options? But I wanted to do it through my personal experiences because it's very appropriate and very common, very familiar. So my mom and dad, they sold in their early 60s. Or actually, mom was in her early 60s. Dad was in his late 60s. They sold the family homestead. And they moved to a beautiful apartment about a mile from where the homestead was. And they also had a home in a condo in Florida. And they did the very common back and forth, 3-4 months here, 3-4 months there. And they did that for a very long time until my dad passed at 82. And mom is still at the private apartment and enjoying life, which is great. And so that's the familiar, sell when you're relatively younger and downsize, right? Now, my in-laws, the other personal experience are the type of people that aged in place. My father-in-law was actually 88 and he passed. He was still living at the homestead. And my mother-in-law lived there till she was about 96. And for the last couple of years, and she's still with us, very vibrant lady, is for the last couple of years, she's been at assisted living, also about a half a mile from the original homestead and a half a mile from her adult children. Now, there's also another person I can relate this to is myself. We have an old Victorian home, large home. We raised 6 children there. And there's 2 that are still at the house. So we're starting to see that empty nest syndrome and looking at options and am I going to do, or are we going to do what my parents did and sell and downsize, or are we going to age in place for the next number of years? So I hope that all sounds familiar to everyone, because again, they are very, very common. Let's start with age in place. So aging in place, there's a lot of factors and when you can do it, when you can do it, should do it, want to do it. Finances is always one of the considerations. And one of the considerations, a lot of people are what's called, and you've heard the term, house rich, cash poor. So this is a good transition into Steve and Pepe, and when a reverse mortgage is the answer to stay at home in that scenario. Of course, there's other scenarios where a reverse mortgage is appropriate. And Steve, I have to tell you that when we originally or initially suggest reverse mortgages to our clients, they get very spooked and very fearful. There's a lot of negative connotations around that. And I always tell them, listen, it is a perfect tool in a certain percentage of situations. Please just talk to Stephen. And, yours might be one of those situations. Let's get all the information and help you make an informed decision. So I'll bring it over to you, Stephen. And if, again, you could tell us your experiences with reverse mortgages.
Thank you, Anthony. Good morning, everybody. So let's talk about my parents, right? 81 and 82, living in the home that I grew up in, 4-bedroom colonial, 2 stories. Both my mom and my dad have fallen within the last year, hit the head. Thank goodness nothing worse happened than just mild concussion, got their bell rung, right? But that makes you nervous, right? They want to stay there. My mother is never going to leave that home. She's like so many of my clients I speak with. They want to stay in that home. They've got a lifetime of memories there. Um, you know, they're comfortable. They know their neighbors. They know where everything is. And they want to stay put. But they're having some, you know, issues with their health. Things are starting to break and come to the end of their useful lifespan, like roofs and paint jobs and furnaces and things like that, and they need to be replaced. And the money that they've saved throughout their retirement is really starting to dwindle because of inflation, because of all of those home repairs and things, and because they're living longer than any generation on average has. You know, they're one of the millions of homeowners 62 and older in this country that own over $11 trillion of home equity. That's a staggering number. But what my dad can't do is he can't take a hammer and chisel and go over to the foundation, chisel out a brick, and take it down to the store and buy a loaf of bread with it, right? They have about $800,000 of equity in their home. They're practically millionaires, but they're living on Social Security checks and an IRA that's dwindling. So that's the typical profile of who we're helping through a reverse mortgage. So a reverse mortgage, I explain to a lot of people, it's just another home equity loan, right? With some different features than other home equity loans. You have to be age qualified. You have to be 62 or, and you know, depending on the program, you can be as young as 55. You have to own your home. If you have a mortgage, we have to be able to lend you enough money to pay off that mortgage, so you can't stack it on top of another mortgage. And unlike just about any other mortgage out there in the marketplace today, with the reverse mortgage, you do not have to make any kind of payments back to the lender for as long as you're living in the home. So it gives people like my parents an opportunity to release some of that equity they have tied up in the walls of their house, convert it into spendable cash to spend on things like the front stairs being redone literally next week, like the $3,000 plumbing job that was done a couple months ago, like other accessibility modifications that need to be done to the home. And for future things like in-home care that will be inevitable, and just paying the bills, filling the oil tank, etc. So it enables them to get at that equity, convert it into tax-free spendable cash that they can spend on all of these things without incurring a new mortgage payment while they're on a fixed income, receiving their Social Security check over here and their IRA distributions over here. That is what a reverse mortgage does. I'm going to have a very long conversation with them when they come back from the trip that they went on this week. They're in Arizona right now. But my siblings and I were talking, and we think it's about time for mom and dad to pull the trigger on this move. You set it up now before you absolutely need it, before it's an emergency, so that it's a safety net in place for these things that come in. Look, cost of living's going way up. The care costs to get in-home care are staggering when you're paying it out of pocket. And I want to see my parents set up with this safety net. So whether or not people realize it when they're talking about reverse mortgages, the majority of the time they're talking about this one program that's insured by the Federal Housing Administration, or FHA. And it's a program created during the Reagan administration. It's been here ever since. It's a very safe program. It survived every administration since then. It enables people like my parents, like all of you folks, to convert that percentage of your home equity into that cash to spend. You can receive funds a few different ways with a reverse mortgage. You can set it up like a line of credit. You can set it up to receive a regular stream of income for your life or for a certain period of time, or you can receive a lump sum. Okay, those are how you can set up a line of credit. A reverse mortgage, I'm going to set up a reverse mortgage. A reverse mortgage does not have to be paid back to the lender unless you sell your home, you pass away, or you move out for more than 12 consecutive months because of an illness or injury or something like that. So that's when a reverse mortgage has to be paid back, but you can pay it back at any time and in any amount you want. A reverse mortgage is completely compatible with a lot of the estate planning and asset protection strategies that law firms like Falco and Associates use all the time, like trusts, life estates. You're not closing the door to that kind of planning that Anthony and his colleagues would use for you by getting a reverse mortgage. Okay, so you don't have to be worried about that. You just need to work with someone who has experience putting a reverse mortgage in place with those other plans. Okay, the three scenarios where I'm helping folks the most is one, planning for that private pay in home care. That's probably 60% of my business right now. Number two, improving cash flow and liquidity in retirement, either by reducing other debts or by increasing cash flow income on a monthly basis. And three, helping people downsize or right size to another home using a reverse mortgage to do that. So we'll touch on all three of these really quickly because I want to leave more than enough time for my other panelists. So first, paying for in-home care. Like I said, we can set up the reverse mortgage as a line of credit. The earlier, the better, because with a reverse mortgage line of credit, that available line of credit gets bigger and bigger and bigger and bigger. Every month that it's open, the federal government guarantees that growth on your available line of credit. So if my parents were to do this today, and we set up a line of credit with $300,000 in it, and they didn't touch it for a year, after a year, it might have $325,000. In the year after that, might have $340,000. The year after that, $360,000. It's getting larger every single year. So that by the time they do need it for the in-home care, it could be $500,000, $600,000, $700,000, $800,000. So that's why the sooner you set up a reverse mortgage for an in-home care strategy, the better, because it gives it time to grow. In-home care costs that I see range anywhere from $10,000 to $20,000 a month, depending on the level of care you need. But that's the kind of costs we're talking about. And it's also a smart idea to stack a reverse mortgage line of credit with other things like VA aid and attendance benefits, long-term care insurance, community mass health benefits that an elder law attorney can help you qualify for. Stacking it with all of these other things is going to have you be as well prepared as possible for whatever life throws at you down the road. So in-home care is one scenario. Second most common scenario I run into, improving cash flow. One, improving cash flow by reducing your overhead. So what's that? The Visa card, the Discover card, the car payment, the home equity line of credit your banker talked you into when you were 70 years old for some inexplicable reason and retired, but you got one anyway. And now you're 80 years old and your payment is about to triple and you're retired and you have no way to pay for it. Wiping that debt out, right? Wiping out child or grandchild student loan debt that you co-signed on and you're on the hook for. Okay, so reducing overhead is one way. These are all things reverse mortgage proceeds can be used for, or giving your monthly cash flow a shot in the arm through a monthly payment that can be guaranteed for your lifetime, guaranteed by the federal government, not by just the company you're working with, or one of these lines of credit, or a combination of the monthly payment and the line of credit. So increasing your cash flow monthly. And the third thing, now close with this, is using a reverse mortgage to buy a new residence. Most people don't know you can even do this, but you can take out a reverse mortgage to buy a new home. And what we're doing is we're putting the reverse mortgage not on the home you own now, but on the home that you're going to buy. It's purchase financing. So let's say my mom had a change of heart and they're selling their $800,000 home and they want to move to a $500,000 condo. The conventional move would be sell the $800,000 home, and let's not take any costs or commissions into account. Let's use simple math before lunchtime. They're selling the $800,000 home. They buy the $500,000 condo for cash, and they're putting $300,000 in the bank. Not too shabby, right? Not bad. If they use the reverse mortgage for that purchase, we could finance about half of that purchase price. So they're selling their $800,000 home. They're buying the $500,000 condo. We're financing $250,000. They're coughing up $250,000 for a down payment. So they buy the new condo, and instead of having only $300,000 in the bank, now they have $550,000 in the bank. Oh, and by the way, no mortgage payment because it's a reverse mortgage. So they're in a much better cash flow position, having $250,000 more in the bank by using the reverse mortgage for financing for purchase. I'm going to stop right there, but I'm going to hang around for the whole thing. In case anyone has any questions, feel free to ask away or contact me afterwards. Thank you.
Yeah, Stephen, excellent overview, and that's why we wanted you to present, and that's why we use your services so frequently. I hope everyone heard that, again, reverse mortgage is a very good tool in very specific situations. You know, if you think you're going to be in your house 5, 10, 15 years, to Stephen's point, you know, if you get it in place now, and if you don't, you know, it's like an equity line, as he said, if you don't use it, you're not paying interest on it, but you'll have it always available. And again, so that's a tool. So let's say that a particular client, again, either a younger client that still wants to downsize or an older client that's having some health issues, despite the reverse mortgage option, despite the home care options, the family is deciding to sell. So we, you know, we'll transition over to Helen in a second, but I just want to bring up that when it's time to sell, you know, there's all these options of, again, depending on age and other assets and health concerns. You know, some people actually do move in with their adult children. Some add an in-law apartment onto the home. Some people move into senior housing, and actually Scott's on the Quincy Housing Authority, and there's some great options there, and the cost is amazing. There's 55 plus facilities and settings. There's condos, there's private rentals like my parents did. And again, if the care needs are significant, it might have to be an assisted living or a skilled nursing facility. And again, before we get to Helen on, you know, the sale process and making that decision, we should have a conversation about what to do with the proceeds of the sale, you know, and because initially and right off the bat, there's tax questions. Most people are aware of homeowner exclusions. $250,000 is excluded per person. So if there's a spousal situation, $500,000, or you may, if you have more than that in taxable events, you may roll over into another home. But taxes are a consideration. Another consideration, and I think you know, you use the $800,000 figure. If you truly determine that you only need 400 of the 800,000 in proceeds, and you have other assets, you might want to take 400,000 in this example and put it into what's called an asset protection trust and start what's called a 5-year look back on that $400,000. Meaning, if the husband or spouse or an individual ends up in the nursing home and you're beyond the 5 years, that asset protection, which you funded with the sale, half the sale proceeds, would always be protected from a nursing home. So other things to do with sale proceeds is, of course, just having cash reserves. Again, stacking, I like the way Stephen said that, stacking care options with benefits for veterans, mass health, and also care options, okay? And so the other thing, and when after Helen presents, it's probably a really good time to look at Joe Reardon and prepaying funeral services arrangements because again, you have liquidity, and when Joe gets to his presentation, you may be in a position to do that regardless of having to sell or not. So with that said, Helen, let's assume that someone has decided to sell. Maybe you can tell us how you start the process, but more focused maybe on some of the older individuals and maybe helping the adult children sell on behalf of mom and dad. And you're a senior specialist, and all the additional challenge that come with selling a home that maybe hasn't been improved in 20, 30, 40 years. And sometimes too, and we can't get to every scenario, but sometimes there's hoarding situations, again, or a dilapidated home, but they're still incredibly valuable, right? In Massachusetts, especially. So Helen, jump in if you would.
Sure. Well, I'll start off and tell you a little bit about one of the certifications that I have, and that is I'm a senior specialist. So that takes place over the course of 2 years. And what the goal of that program is, or that certification, is to provide real estate agents and brokers with some information on how to deal with the senior population, because the needs of the senior population are very different than our traditional customer. So sometimes there's health concerns, sometimes there's memory care issues, sometimes there are homeowners that aren't able to keep up with their properties in terms of repairs and maintenance. And a lot of times the kids become involved in the conversation. So in order to achieve that designation or certification that I have over the course of 2 years, I have to have worked with at least 10 seniors, and they consider seniors over the age of 62. I am required to provide attestations from those clients or their family members as to how we interacted. And the big reason that this was created is to understand the needs of the senior population, but also to help family members be more comfortable that they're not being pushed or pressured by a salesperson. And that's a critical piece, because many times these senior homeowners, they haven't been involved in a real estate sales or purchase in a number of years. So it's foreign to them. So they need to get acquainted with and acclimated to the process and understand what's involved. So I achieved that designation, or reached all the milestones for that well over 10 years ago. And a large portion of my business is working with seniors. As you know, Anthony, we've had a number of clients in common over the years. So one of the things that's important for people to understand is the client is actually the homeowner. And a lot of times I'll be reached by an adult son or daughter or a family member that says, hey, I'd like to talk to you about my parents' home and what some of the possibilities are. So from a legal standpoint, without the homeowner's permission, I can't talk to those kids. So that's something family members need to be aware of. You need to have an open and honest conversation with your parents, or the parents have to have that conversation with their children to let me know to what extent they want the kids involved. And sometimes that can be tough because, the kids think they know best and the parents have certain wishes and desires. So that's a very important piece. And just to touch on what you mentioned, Anthony, and Stephen mentioned, so when people are considering what their options are, in some cases, they may not have the option to maintain their home or to stay in their home, especially if they're going into a facility that has any kind of subsidy. So the facility or the residence doesn't really care if they have the money in the bank, but they can't own another property. So that's something that really comes into play with the number of people, depending on what type of new home they're going into. So that's definitely something to take into consideration. And so it can be a daunting process sometimes for seniors, and that's why it takes a slightly different process. You need to spend a fair amount of time educating the homeowners about the process, what's involved in it, and what their options are. And as has been mentioned before, in most cases, they're sitting on a ton of equity in their home. It's just not liquid. It's not available to them. So the need arises. Yeah, perfect scenario. So our real estate taxes always go up. but so does the value of our home. So while they're sitting on this liquid cash, I mean, cash, it's not liquid and they don't have access to it. So I walk through that process with them in terms of help figuring out if they've made some decisions on where they want to go and what their best options may be. Sometimes it's selling, sometimes it's not. And that's a very frank discussion. I don't go in there automatically assuming that somebody's going to sell their home. What they really want is information and to have that discussion about what their choices are. And as we talked about with people on fixed incomes, they don't always have the liquid cash to keep up with the repairs and their maintenance on their home. And that can become burdensome to them. So as they age, and whether it's somewhat of a decline in their physical abilities, and sometimes it's memory care issues, how they used to maintain their home and take care of it is not necessarily an option any longer. And that's when it's time for everybody kind of to get together and figure out what is the best solution for them. I can tell you, and people that have made the decision to move, and I know it's going to be another part of this conversation, but with relation to trusts and not having trusts and placing the homes in trusts, over the last 6 months, I've been involved in 5 home sales for seniors, and they were all very different scenarios. But I can tell you the families that were prepared, that had their documentation in place, whether it was a power of attorney, a trust, that those go much smoother. And it's really important if you find yourself in an urgent situation. 2 of our transactions, the senior had passed away and the kids were kind of left with the house and they needed to figure out what to do. If that parent hadn't taken those advanced steps to have the will prepared, have the trust ready to go, and have their children informed about what their responsibilities were, that could have been a very difficult process, which means we can end up in probate courts and things can be delayed for a substantial amount of time. And in the meantime, the kids are trying to keep up with the utility bills and the insurance and the maintenance of it and all of those things. So I'm a big advocate for people being informed and knowing what their options are and what works for them in terms of pre-planning, especially when it relates to their primary residence. So as I mentioned, a number of transactions since the beginning of the year. 2 of them were unfortunately deaths where the seniors passed away. We had another very recent situation where I had an older man that at his age, you wouldn't expect him to be alone, but he had lost his wife at a very young age. He surprisingly lost his son at the age of 56 years old. So he thought that his son was always going to be there to help and be a resource to him and as he aged in place. Unfortunately, that wasn't the case. And he experienced some very difficult health issues, which prevented him from safely living on his own at home. And we spent a fair amount of time going through what some of his options were. And when I tell you it was a very difficult situation, he had no other resources, to the point where there wasn't somebody to help him pack up his clothes or make the move. So those are the kind of things that this pre-planning and the preparing really are helpful with. And in this case, this gentleman took advantage of the senior resources whole program and things that you have. So we worked in tandem to make sure that he was in the right place, that we transitioned him carefully and made sure that, his home was taken care of, it was sold for top dollar, and he had the assets to comfortably and feel comfortable about the expenses associated with his living costs for the next number of years. And he was very, very grateful. And the burden it took off of him of knowing that he was in a safe environment and somewhere that he liked. It's a beautiful place. So those are just a couple of examples of my opinion on family members or homeowners, senior homeowners being prepared. It really does make a world of difference. And then the change in the quality of their life can be phenomenal. With the gentleman that I mentioned, his life changed so dramatically, I can't even explain it to you.
Yeah, Helen, you're spot on all this, and this is why we work again with another resource like yourself. And we're talking all the numbers and the legal documents, and but clearly these are all very emotional
Absolutely.
and times, and and you have to have people that care about their clients and are patient. And walk through all the options and sometimes walk through them again and again. And that's why, we work with the professionals that, like yourselves, that really care. And I heard three things on, the reasons to sell. One is, of course, the care at home is too hard to manage.
Correct.
One was the financial ramifications of keeping up a household. And the third, maybe we didn't touch upon enough, and it sounds like my parents did, is more of a lifestyle decision. And again, it's easier when you're younger to make a lifestyle decision like that. And so absolutely, I'll factor in. I do have some questions here, but I have 3 or 4 questions. I'm going to hold them because I want to hear from Joe first, and then we can present to all of us at the same time. So Joe, again, we've worked together for so long, and we've done a lot of pre-planning in the Medicaid situations, and that's one of the questions I have here. The traditional spend downs, you are going to address that, of course, but also address, again, maybe a younger, healthier, or maybe, 60s, 70s, 80s. What are the triggers to coming to you and taking, that burden off the adult children, if you will? But why don't you tell us your experiences with that?
Sure. Well, thanks, Anthony. It's good to be on the panel with my colleagues here. And I want to kind of follow up on what Helen was speaking about, because Helen hit the nail on the head about planning, because you can do some planning. If you do some planning, you're avoiding the stress of an urgent situation. Somebody dies while they still own the home and they don't have a plan for the home hasn't been sold. Well, we're guaranteed to die. We're not necessarily guaranteed to own a home, but unfortunately, people don't often think about what will happen when they die in terms of where they will go. They have to go somewhere, and people often will push that down the road a little bit. But I can tell you from personal experience that it is far better to be prepared and have all the planning done in advance. And I use the example of my mother-in-law. My mother-in-law was sick for a long time. She had dementia. She actually was a client of Senior Resource Center. And of course, that was an easy one. They didn't have to convince me that advanced planning was a good idea, but it was part of our overall plan. We were able to set the funds aside in an irrevocable funeral trust so that the money was protected to pay for her funeral expenses, because she did end up in long-term care and was on Medicaid, Mass Health, to pay for those expenses. And at $500 a day, there are very few people who can pay for long-term care. That was a tremendous benefit to us to have the financial resources set aside. But what I will tell you is that the greater benefit was when the time came, we didn't have to think about what was going to happen, what we were going to do. Everything was in place, and just a phone call started everything in motion. So our focus shifted from having to do the business side of it, if you will, to creating an experience. And really, that's what people remember. I will tell you this straight up. People don't remember the color of a casket or an urn, but they remember how they felt and they remember the experience. And through advanced funeral planning, they're able to create that experience and avoid the stress that comes from an urgent situation like Helen was speaking about. But there are other reasons to do it as well. I mean, certainly benefit eligibility is there, but it also identifies legal and practical issues, particularly with cremation. Many people may be unfamiliar with the legalities of cremation, but it's far more difficult to navigate than it is with casket burial. In addition, it's going to help with family relationships. These conversations are important to have, but we live in a death-denying culture. People don't necessarily want to speak about it. But by having these conversations in advance and sitting down with a funeral director, families have the opportunity to make sure that they're prepared. It's a very simple process. For any of you who are with us on the webinar today, if you've made funeral arrangements before, you've gone through the advanced planning process. It's a matter of gathering vital information that would be needed to file a death certificate or perhaps create an obituary. It would be choosing a method of disposition, burial or cremation, or both. It would be choosing what type of ceremonies you're having. For example, with cremation, there are many, many more ceremony options than there are with casket burial. And discerning those options at a time when you've had a death is very difficult. Planning ahead of time allows you to speak to your families about all of the options that are available. And then what people are very familiar with is the financial side of it. We speak to it in terms of Medicaid spend downs, as Anthony said, and that is a part of it. But it also just allows families to know that the resources are set aside and protected. So the 67-year-old who's working with Anthony and the team at Senior Resource Center on their estate plan is wise to choose to do it at that time, to have it as part of their overall plan, because as time goes on, they will need it. And it's a question of when rather than if. So if everything is part of their estate plan, they're more on the planning side that Helen was talking about, where pre-planning is going to protect them and for their families. But I'll tell you, Anthony, what we often see, and I saw this in the chat, is the single greatest question that people ask about advanced funeral planning is, where does my money go? And that is a very legitimate concern. Anthony, we've been working together for years, and you know that when a person prepays for funeral expenses, they don't even make the check payable to a funeral home. It goes directly into a trust. That way, the person's funds are protected should the funeral home go out of business or they move. All of the accounts are transferable. The driver's seat is occupied by the person who made the arrangements, so that regardless of what happens in life, and there's ups and downs and twists and turns, those funds are going to be set aside safely to ensure that the funeral expenses will be cared for at the time of need. And typically it's done in two ways, either through a traditional bank trust. Here at Cohane, we use the Massachusetts Funeral Trust or the New England Funeral Trust through the Cambridge Trust Company or TD Bank, respectively. Or we use a pre-need insurance vehicle, which has an additional benefit of growing tax-free and has easier transferability. But those are set aside. We can't touch them. And if you're choosing to make it part of your estate plan, you'd want to create an irrevocable trust so that you can't touch it either. But most importantly, it's not considered an asset by Medicaid, the state, the nursing home. They can't touch the money either. The process, being simple, is one that we encourage families to consider now rather than later. And it becomes a part of the overall plan. When someone's considering a reverse mortgage, when they're considering selling their home, when they're considering downsizing, it's a good time to take a look at their overall estate plan and how their assets are being configured to make sure that they're avoiding tax consequences, that they are making sure their beneficiaries are well taken care of. And part of that should be advanced funeral planning, because when the time comes, it is far easier to make one telephone call and focus on what's really important rather than an urgent situation and having to make difficult decisions at an extraordinarily difficult time.
Yeah, Joe, thank you. You actually just picked up on that question that came through. And a related question is, what happens if the costs of, what if it's 10 years before it's used? What happens with the additional cost, inflation?
Sure.
What happens with that?
Most funeral homes offer cost protection programs where if you pay it in advance, they will guarantee you never have to pay anything again for the funeral home expenses. That way, there's an additional opportunity to save some money on the family side.
Perfect. And so let's get into a few of the questions to keep the conversation going. I like this one here is, well, actually, this is, I think, an easy one for you, Stephen. Can you talk about what happens upon death if a reverse mortgage is in place? I know you touched upon it, but this person maybe didn't hear specifically what happens.
Sure. So let's say that there's one person living in the home. They're the one borrower on the reverse mortgage and they pass away. So that's one of those events that if it happens, the reverse mortgage is called due and payable. It has to be repaid within a certain period of time. So there's a grace period for their estate or the trustee of their trust to see to it that the reverse mortgage is paid back within that grace period. That grace period initially is usually 6 months, and it can be extended for another 3 months if needed. and another 3 months after that if needed. This is all federal regulation regulating this so that the family can get up to 1 year as long as they've demonstrated what the code says are reasonable efforts at trying to repay the reverse mortgage. So what is that? That's that your attorney has filed the probate paperwork to get your will allowed and your personal representative appointed so that someone can then go to Helen, hire her, list the property and sell it. Or it means if the home's in a trust that the trustee is gone to Helen to get a listing agreement and show the home and sell it. Or if they're going to keep the property in the family, that they've gone down the Citizens Bank and applied for a 30-year mortgage to pay off the reverse mortgage and refinance it out of the picture. The biggest myth out there is that the big bad reverse mortgage company swoops in, kicks the people and their stuff out, takes over the home, and it becomes their asset and they get all the equity and everything like that. Simply not the case. Okay. The home is almost always sold. The lender's paid back what they're owed, and whatever's left over goes to the estate and is distributed according to the borrower's will or to the trust and distributed according to the terms of the trust.
So Stephen, actually, from my experience, it seems like the reverse mortgage holder has a little bit more flexibility than if it was a traditional mortgage, because if you don't pay your traditional mortgage within that year, they will foreclose.
So after the year goes by, if it's not paid
No, I
back,
understand after
then
the
the
year goes by.
foreclosure can start. But yeah,
Within the year on a traditional mortgage,
Yep.
you're going to be getting foreclosure notices, right?
Yep.
So it actually, in that particular instance, gives the family more flexibility than if you had a $300,000 mortgage that nobody's paying.
Yep.
Which unfortunately is a common situation as well. Helen, you had your hand raised up. Did you want to add to something?
I did. I just wanted to go back to something that Joe said, and what he mentioned is family relationships. And he talked about, in the event of a death, that people want to have the opportunity to grieve and go through that process in their own kind of time frame. But even if there's not a death, if the homeowner decides to make a life choice, whether it's go to assisted living or a different type of environment that's more conducive to where they are in their life, kids have opinions. So, this pre-planning and these discussions that they have, with senior resources and with your group, Anthony, that's so important, because then there's no surprises. The kids know what the parents' plans are, whether it's where they want to be buried or, do they want to be cremated and have their ashes spread in wherever. But it also helps the kids to understand that this is their parents making these decisions. This is where they want to live. This is what they want to do. And then you don't have that tension after the fact. And especially it a lot of times, there's two really main places where it happens. Obviously, first is when a death occurs. Then the kids jump in and there's a lot of opinions and everybody says, oh no, mom would want this or dad said this. Without it being documented, I can't tell you how many times I've seen it, arguments between kids and siblings. It can be very difficult. And it also can kind of slow down the process. So if the homeowners decide what they want to do, they've documented what they want to do, and it's their choice if they want to share it with their children or not. Even if they choose not to, the kids see what the parents wanted to be done. And if they start to question things, especially when you have seniors that are making a decision to sell their home and maybe go to assisted living, or maybe, like you mentioned, with your in-laws to a condo, something that's an easier lifestyle for them, the kids all of a sudden have an opinion, because in their minds, and I don't believe in this, but in their minds, their parents they're spending their inheritance, right? So they want to have a little bit of say of what's going on, what mom and dad are doing. And a lot of it is out of love and concern. I don't mean to make it all negative, but I don't know how many of you have siblings, but have you ever 100% agreed on everything with your siblings throughout your entire life? And how about in an extremely stressful situation? Everything is amplified. So that's why it's so important to have this pre-planning and the trusts and those kind of things completed It's what the homeowner wants. It's what they've expressed their wishes. And like I said, if they choose to share that with their kids or whoever else they need to, it's all done. And it takes the pain and stress points out when an action is going to be taken, whether they've decided to sell or there's a tragic event, from a health perspective or a death.
So Helen, you just gave us a whole new webinar next month or the month after, and it should be entitled Family Dynamics.
Oh, boy,
And,
absolutely.
We are definitely very sensitive to that, and we address that. We try to get all the quote, of course, what the parents want, if they, who they want in the meeting, who they don't want in the meeting, quote unquote, the decision makers into the room, but too many chefs in the kitchen is not going to work. 6 different kids, you're going to get six different ideas of where mom and dad should go. So to your point, the pre-planning, no, actually, this is what your mom and dad put in place 10 years ago, and it's very, very specific. Takes actually away 70% of that angst. There's still always some families that just can't help themselves, and it gets disputed, and unfortunately we deal with that a lot. We deal with getting off track a little bit, but family dynamics, you have unfortunately sometimes addiction issues, in-law issues. I lent them $100,000 issues. We're very sensitive to that. We deal with all those issues, but it is and we love dealing with families, of course, that everyone's getting along and mom and dad is still capable of making all decisions. But there's exceptions to every rule. And I think we dealt with a lot of exceptions in this discussion. The generalities are what they are, from reverse mortgage to downsizing to prepaying things and dealing with finances. We broach these from a mile high sense, but every family comes in with a different set of circumstances, and it takes a long time and patience to get them to the right place and help them make decisions, because not making a decision is unfortunately a decision and sometimes not the right one. Looks like Stephen, you're getting the brunt of the questions here. What, if any, interest is taken on a reverse mortgage when the time comes for equity in the home is used to pay off? I don't understand the question. I probably read it wrong.
No, I'm looking at it too. I'll try to answer. So it's a loan, right? So interest is charged on the money that the homeowner borrows. That interest gets added into the outstanding balance that they pay in the future. I use the analogy of a tab at a restaurant. It's you take money out, that gets added to the tab. Then the lender starts charging interest on what you took out. The interest gets added into the tab. So you have a balance that is growing larger and larger over the years if you're not making any voluntary payments on it. It's the opposite of my mortgage to Chase. I write a check to Chase, and some of that's interest and some of it's principal, and that balance gets a little bit smaller over time. Reverse mortgages, though, are what are called non-recourse loans. And it's another way, Anthony, that they're unique in the world of mortgages, and that when the time does come to pay that tab, if that tab is bigger than the value of the home, then the homeowner or their family is only on the hook for 95% of the future value of the home. So if they owe more than 95% of the future value of the home when it's being paid off, neither the homeowner nor their estate nor their trust is on the hook for making up that difference. And that's where the government insured aspect of the loan is so vital. It makes up that difference. So no one's pulling out their checkbook and paying the lender for the surplus over and above the value of the house.
I'm so glad you brought that up, Stephen. And that's a common question I get as it relates to reverse mortgages. The other way, sometimes I explain it, tell me if I'm wrong on this. I hope I'm explaining it right. And I think Helen alluded to it as well. If the house is worth $800,000 and you're taking a $300,000 mortgage at 5%, it's growing what, $15,000 a year, right? 5% of 300,000. Well, if your home is appreciating 4% a year, it's appreciating $32,000 a year. So there should in most of these reverse mortgage situations, unless it's running for 20, 25 years and there's a down real estate market, you're still going to have equity. You're still going to have a legacy to pass on to the kids. And I have to tell you, there's XYZ percentage of our cases, 70, 80% of our cases, the parents are fixated on legacies. You know, sometimes it's not just the kids, Helen, it's the parents that want to leave that legacy. And, you know, the extreme is, well, you're eating macaroni and cheese every night because you're trying to leave your IRA to your kids. You know, so where's the healthy balance? You know, and I think most kids want their parents to use all of their assets to have a better lifestyle, a better life, better care options. And again, but some parents try to find that right balance of this is what we need and this is what we want to pass on to our children and grandchildren. So I think we're coming up to the hour, and I reiterate, it's very hard to dig as deep as we can in all these issues, but I want you, the listeners, the participants, to understand you have a group of professionals here that are always available for your needs and the specific questions that you have in your specific situations. You just have to reach out to one of the four of us, or you can reach out to us. We'll be the quarterback. That's kind of how we do it as a resource center, and you know, address all of these in much more detail. But from a mile high sense, I think I hope you heard what you needed to hear, and I hope, again, if you still have questions, circle back to us. Remember that we're doing a more detailed case management next month. So, you know, hopefully you join us for that. And as I wrap up, of course, I want to thank our three panelists. And again, we work so closely with them and they do such a tremendous job. I want to also thank Scott Campbell, who's on, and these are not easy to pull together. It takes a month and a half to pull together. Scott's our Director of Operations. I want to direct Isabella Falco. The name sounds familiar. She's our social media consultant and does a great job, help pull this together. And Tina Mayo, one of our paralegals, also helped pull all this together. So I want to thank everyone for joining and participating. And for the people that are on the webinar, again, I really want to stress, you know, you can email us anytime. We do also provide no cost initial consultations to see if we are a good fit for you, and see if, again, if you need to go deeper in all of these scenarios, we're available to do that. And thank you everyone for showing up. And everyone have a great day, and spring is here and summer's to follow.
Thanks, Anthony.